this was a good draw, bro.
Yeah, it was
Like
really good, bro. It was good, bro.
And boom, welcome to the Final Boss course part 2. In case you haven't seen the first one, make sure you watch the first one. I posted it back in December. This is over 2 hours and 13 minutes of straight value. Another Final Boss course from Azarel Kobos just for you. You watching this, you're fine ass. I dedicated hours of my time to put this together just for you. I got you, king or queen. So boom, it's time to lock in. Go drink some coffee, put your phone on D&D, break up with your girlfriend. It's time to dedicate and learn this skill right now. Lock in, bro. I hope you enjoy. Lock in, bro.
I'm gonna have you draw out what you can see. So just based off of this, like draw out the steps for me on like what you can see.
all right. So how I would see this was like so this is the market open, so I'll kind of wait for enter a trade over here. So gonna do my ranges. Gonna go with this like big one, bro. In the beginning. Like first
Okay.
step,
Mhm.
step over here, adjuster over here, and the third point.
Mhm.
It's a small break of structure. Then I would go for the fourth step, which is gonna be over here. That I'm trying to enter a trade when market opens, and go in a like smaller time frame over here, and just like wait for it.
Okay.
What do you think?
Yeah. Somewhat correct. You got the first three steps right. Just a bit struggling on the fourth.
Because if I would just like do my third solidify point over here or over here, isn't that like how it's supposed to be? Because I'm not trying to enter here. I'm just like trying to enter market open.
Say that again.
Like if I try to find any like third solidify point over here or here or here, I'm not trying to like enter a trade over there. Just trying to wait for the market open, bro.
Yeah. Yeah, because when did this happen? This happened during Asia. It's crazy.
Asia, yeah.
But where is the break of structure? Where is the third solidified point?
I mean, would be this one, no?
hmm Okay, perfect. Yeah, so you are seeing your solidified points good.
Yeah.
Okay, boom. All right.
So let me.
Oh, yeah. I'll draw it out. So, starting from left to right, yeah, you were correct about the range. It always starts from here. Boom, boom. You can see we created this range first, from this low to this high, all the first three steps. And then we had a break of structure, a smaller one here. Like that's when you were saying you might have gotten a bit confused because it was a bit ugly, but I did catch this buy
Oh yeah.
because the break of structure on the smaller time frame came from here. Boom, it broke above. So this is where I did all the steps
So
from
this
this
was like
range.
yesterday.
Yeah, this was yesterday's New York session. So you can see right here, the first step, break construction of the new range. Second step, the last push. Third step, your solidified high. And the solidified high came from, did we break above this or no? No, we didn't. So yeah, technically it came from this. Boom, boom. This break, boom. Because this point never took out that high. So the third step was right here. Boom. We broke below the solidified point here and it came back for that last push. Then it melted and it was falling all through Asia. I mean, all through London. And then it came back to the last push here. We took out the last push. And then for New York session, I'm zooming in and I'm like, okay, I noticed how we dropped before New York session, how we dropped a good amount of points. But I was like, we're still bullish. We're still in our 3 steps. We're still gonna go up. Nas is just you can just see it keeps making new bullish ranges. So
Yeah.
right here, I notice this, like I'm following my bearish ranges. You can see we're breaking, well, technically it starts from here. You can see we came back for a last push, boom, and we're just following our bearish ranges. New bearish range, high, low, boom, new range, high, low, high, low. We ended up breaking it here, boom. And you just see we're making a whole bunch of new bearish ranges, high, low, made a new bearish range, came back for the last push. So you can see how it makes steps from all angles in all time frames. So you can see first step, your new range, second step, the last push, third step, your low, because in this case we're dealing with the bearish range, high, low. And you can see how it didn't change structure, it didn't change directions until we broke a third solidified point. Boom. High, low, came back last push, third solidified point, boom, melted. But I don't care about selling. I don't really care about casting the third step to the second step, but you can see how it plays out on in all directions, all time frames. So right here, boom, we broke below this low, forming a new range, like from this high. And then you can see right here, this first break right here was a continuation break for this range, high, low. And then you're already doing good at identifying your continuation versus solidified points because you already marked up the other solidified points. So you can see how before we made that first break, it just looked like a stick, like we didn't have a low yet right there. You see that? From high, we broke below. We haven't formed a low yet. So first we need the continuation break that confirms the low of this range. It gets taken out, and then this right here becomes solidified. Boom. And it only gets solidified until we take out this low. Boom, it gets solidified, and then look, boom, break of structure. So at market open, I noticed how, because you can see how right here, market open, and it jumped up, and then it broke above this. But the way that I'm looking at it is once we broke above this, I was like, okay, I see that we're in this good size range here, first step, second step, third step. And then I noticed how we just broke a solidified point. We made the fourth step. We made the fourth step. And then once I saw, like, you see how this break of structure is a good size. And then you see how sometimes you have to enter right off a break. But if I would have entered right off a break, I didn't want to have a stop loss this big. Like you see, that would have been like an 80-point stop loss. So I was like, okay, I wasn't confident entering right off this break. I was like, I'd rather be patient or miss out and wait for the other steps. So here, this is when I quote unquote did the fifth step where I repeated everything all over again. And I waited for everything to set up. And then you can see how right here, it does the first 3 steps again. First step, new range. Second step, the last push. Third step, the high. And you can see right here, continuation break, target, solidified point, break of structure. But when I'm in such a low time frame, and even in the higher time frames, like I don't care about the third step to the second step. Like I'm not looking to place any trade unless I have my first 3 steps because that's gonna confirm your solidified range. And then once I saw it here, I saw how we made a deep retracement, but we didn't take out this low. And this is gonna come with more experience. I'm pretty sure I sent you did I send you a call about liquidity grabs where I went over with this one student named Frankie?
Yeah, I saw that one.
Okay, perfect. So you see, even sometimes, or go ahead.
Yep.
So even sometimes you'll notice that even if we come for a low, it'll just grab a low. Like technically on paper, it is a break of structure, but sometimes you can see how we'll just grab lows. Like it did it a lot like 2-3 weeks ago. It kept grabbing lows, it makes a liquidity grab, and then boom, shoots up. But in this case, here, I noticed how deep the retracement was. I was like, okay, uh, it could do that. But then I saw how we formed a solidified point here. I saw this. I saw continuation break, target, solidified point. So this was my third solidified point in this range. Boom. So then this was quote unquote like first step, second step, third step. So this was my third solidified point, my fourth step. And in this case, like I don't need another fifth step because I'm already so deep into this time frame. But right there, I entered, and then boom, it just took off. And it fucking took a sweet ass time, but you can see it and initially just took off.
Oh, yeah.
Boom. So you can see how simply just being patient, waiting for all your steps to align, and you'll see how the trade plays out.
Got it. Yes. But
And then
yeah,
I ended up closing like right here, but it still just freaking took off, bro.
but I would do the same, right? I'm not trying to be like too greedy, you know. Just take as much as you can.
You're trying to what?
No, I would be the same because like better take as much as you can than being too greedy and lose it all, you know?
Exactly. Yeah. So then boom, that played out. And then you can see how, bro, it just does rinse and repeat all over again. So that played out. And then boom, we broke above this range right there. And then now we form a new range all over again.
Bro, but do you need to like find your like third solidified point in the last push always, or it can be over here or whenever it happens?
Yeah, it doesn't have to be necessarily in the last push, but the session matters. Like I would only care to enter on a third solidified point if I'm in New York session.
Oh, okay, got it,
Because
got
the
it.
third points tend to fail in between Asia and London. I mean, it takes a lot of back testing so you can see. But bro, if you want to get rid of all headaches and get rid of, failed breaks of structure, just New York session is the best session for New York.
Yeah, bro, I'm trying to do the New York session too. So like a good routine would be like wake up at 9, just like do your steps, you know. At 9:30, you just have to wait for the steps to align, or it can be like because sometimes they don't align too well, you know, as
Yeah,
you
yeah,
did.
but just what you were describing, it is gonna take because just how you mentioned, sometimes it's cleaner. Like some days are cleaner than the other days. Like you can see right here, like I fucking deleted my sessions on accident, but hold on, let me fucking make it to my sessions again. My bad. Tokyo.
Yeah, bro. Recently, everyone be trying to go over there to
What
visit.
happened?
Everyone trying to like visit Tokyo.
Oh yeah. I need to make it out there one day.
Yeah,
Okay, boom. All right, there we go. All right, so you can see how, like, if I would have been on like the 15-minute, like this right here looked ugly, you'd be like, what's going on, you know? But
yeah,
then uh it's not until like obviously like like the 1 hour 30 minute 15 minute like 1 hour 30 minute 15 minute, especially when we're in all-time highs, we're going to be dealing with more kind of intraday ranges. You can see how the 15 minute 30 minute are pretty much to identify your bigger overall range. And then once you're at the last push and then you go into the session and then you understand where you're at on a bigger time frame, and that's when you go in that's when I go in into like my 1 minute, and then that's when I marked out all this and be like, okay, now I'm waiting for all the steps to align again on the 1 minute. Boom, like what I described there.
yeah. Makes sense. And
Yeah.
do you usually like, or what do you suggest to do like two trades in a day, like two pairs, or just like do
Yeah,
just
stick to one, two
like,
pairs max, but I definitely recommend, bro, just sticking to Nas. It's the just the best volatile pair that you can see, bro. It does this strategy rinse and repeat. Like if this strategy applies on all pairs, but this one is just clean, bro. Like you wait for the steps to align and it takes off at the session.
you just save off that headache that you.
Yeah. So boom, you can see right here, everything repeats itself all over again. And then, bro, this shit was moving, bro. Like this whole range moved very good during Asia. Not it pumped up during Asia, and then London it kind of was bullshitting, and then New York it fucking pumped, bro. So you can see right here we have all all the steps again. So you can see our new range, first step, second step, identifying the last push, third step, your high. So you can see right here on like the small time frame, it made like a small little break. But then you can see like I don't really care about the third step. I want to catch my fourth and fifth step within New York session. So I don't even look at the charts. I mean, in your case, since you're like still studying, like you have to study all these videos and understand the strategy like over and over and over again, like on your free time and even out of the sessions. But you'll realize that once you understand the strategy and you can see it, like, bro, I don't look at the charts 30 minutes until 30 minutes of New York market open. Because like I know I'm not going to trade Asia. I know I'm not going to trade London. So there's just no point in me looking at it, trying to be eager to place a trade. So I've just learned from my experience. Like I have the experience to where you can see how I can see all these steps from nothing. So I just hop onto the charts 30 minutes before, I do my analysis, and then I'm like, okay, boom, I'm in this range, I'm in this step. I know what I'm looking for, etc.
How long do you stay in the session?
It depends. So this session, like you're saying how long I stay in a trade?
Yeah, I mean, how long with trade or without trade? Like, how long do you stay after 9:30? Like 2 hours?
No, like 1 hour, typically 1 hour. But then, like, here's a good example. Like, typically 1 hour, like, this was a good example of like when I hopped away or whatever. So, in this case, I was in this range, and this was on Nicole's birthday. Like, I went out and forgot my fucking laptop. But you can see how we repeated all the steps again, low, high. You can see first step, second step, third step. And then you can see right here before market open, it tanked, it melted. And then
Okay.
we formed this big solidified point here, broke above, broke below. And then I was like, okay, I'm gonna place my alert here. I placed my alert here. And then I was like, I'm not gonna touch it. I'm not gonna look at anything in between this until I break above this. And then you can see how we didn't even break above it until after the session at 4:20 p.m. And which is why it kind of quote unquote failed, because if it was gonna truly take off from this session, we would have took off after this break, repeated all the steps here, and then boom, took off. But then it failed. And then you can see how the buy ended up coming the next day in the session. So I'll typically wait for my solidified points, like pretty much my third solidified point, fourth and fifth steps, 1 hour in the session. And if I don't, if it doesn't happen within 1 hour, I place an alert. And then if it never triggers it, I never really look at it anymore. Like I'm just like, okay, no trade for me. I'll wait for the next day. So like that was a good question.
Yep, that's
So
good.
typically, yeah, like 1 hour, and then if nothing happens, if it forms a solidified point before the hour, I place my alert, I step away, and then if it hits it, I come back to it. But whenever I come back to it, I'm still waiting for the steps again.
Yeah, just like being patient with it.
Yeah. So then right here, we have our first three steps, came back to the last push. And then so like in this case, obviously I wasn't trading at this time, but I'll give you like my analysis of my thought process before market open. So I come to market open. No, I think I hopped on 9 a.m. So yeah, look, I'll make the replay tool at 9 a.m. So I'll give you my whole thought process of how I was looking at this for today's session. So you can see right here, I have my first three steps from this new range, first, second, third. Now I'm like, okay, during Asia, I see that we made this break of structure. We made our third solidified point to go higher. But then you can see how sometimes there's no retracement after a break, like it just straight took off. So I was like, okay, this is clearly now our new range. Like this is our fourth step right here. And then right here, our fifth step is repeating everything all over again. So I'm looking into the session. So I'm like, okay, now I can kind of start to zoom in more. I was like, okay, I know that we're within this, and then I know this is a fourth step to continue higher. So you can see how it's literally repeating this all over again right here on a smaller time frame. So then right here, I'm marking out everything. I'm like, okay, we broke below, broke above, took out that high, then we broke below this. And then I was like, okay, now I see that we formed our third step. So then right here, we formed our first three steps all over again. First step, new range. Second step, last push. Third step, my solidified high. And I'm like, okay, I don't care about catching this to this. But like, even though I knew it was going to melt, one, it's before market open. And then two, this is just trades that I don't like catching. So I don't care. I'd rather wait for my fourth and fifth step. So I let all this play out. Oh, fuck. So I let all this play out, and then I see, ah, I see right before, what time was this? Yeah, 9. Yeah, this was yeah, right before market open. It grabbed that high and then boom, just melted. I was like, all right, bet. I was like, okay, now we're coming back to the last push. So even though I could have caught this, like this is just something that I don't really care about catching, but everyone has their own preference. You know, I had a student, he caught the sell right at market open. Like he caught this. But for my liking, that's not really what I like catching.
Yeah.
So here, uh, all this stuff is playing out. And then I see this. I see how we tapped into this last push here. You see this last push before breaking above structure here. We tapped into this last push. And then right after this last push, right after we tapped into that last push, oh, fuck. I go into the 1 minute and now I'm zooming in here. Oh, yeah. And then I see this. All right. I see this. This was right before it shot up. I'm like, okay, we did this big range from this high to this low. But then the way that I saw like how volatile this was moving, like how perfect this range was, and how we already dropped literally at market open, we just melted 136 points. And then we came back to this last push, and I noticed that we made this small little break of structure here. I was like, bro, this thing is about to take off. And then I almost entered right here, but like it would have been a big stop loss. So I was like, fuck. I was like, but it was moving so quick, and this is just gonna come with intuition and having experience in the market that I was like, bro, this shit's about to just take off. So I didn't enter here, and then I saw this big candle, and once it closed here, I entered like right here. I
So you
entered
did like,
right here. I entered right here with the stop loss right there.
oh, okay.
And then I was like, bro, this shit's just gone. And then you can see, boom, it just took off.
And where did you like exit it? Like here?
I took out here. Yeah, yeah, yeah. Right there. Right above this high, boom, took out right there.
Yep.
And then boom, you can just see, bro, it's still boom. It had the retracement, but we're still gonna go right back up. Boom.
And that's beautiful. I got another like question because I saw like other days I was studying for it. You know, NAS was in all-time high. What do you
hmm
think what causes when it's like in all-time high? Like, is it gonna like align to the steps or
Yeah, 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 bro. You can see, bro. We're in all time highs right now. And then you can just see, bro, you just gotta keep following the steps. Because bro, Nas, you can just see it just goes up forever. Nas is the top 100 stocks in the world combined to one. And if one stock is underperforming, they literally take it out and replace it with a better stock. So ideally, bro, like unless there's like a huge financial crisis, like like uh
a war or whatever?
like a not even a war, because bro, the war made it shoot up like crazy. Like look at this.
Yeah.
It was a bit the only reason it was choppy right here, like bro, this is why uh, like, bro, war is just good for the economy. Like, that's why they do that shit because they're selling a whole bunch of fucking missiles and all that bullshit. You can see how here for, and it was some bullshit because, bro, I remember all this. After this range here, you can see it was bullshitting for like over a month. because they were indecisive. Like they knew some shit about the war was gonna go on, and then as soon as the war happens, boom, look how it just made it pump.
Damn, bro. Yeah.
So
Because I was
unless there's
thinking,
like or go ahead.
because I was thinking sometimes when it's like all time high, is that fear of like melting down, like crashing. I
No,
was
it's
like,
never gonna like melt down. Like you can see how the only time there was like a crazy meltdown was COVID 2020. And then obviously you'll see sometimes we'll get some retracements, like it has to level out. It shot up from like 2020 for 2022 for 2 years. We had a retracement and then just shot up. And you can see like occasionally we do have retracements. Oh yeah, I don't remember what happened here, but I remember the beginning of last year for February, bro, you just had to press sell every single session. It melted for like fucking a month.
damn.
But then you can see, boom, it just goes right back up. So obviously sometimes there is going to be retracements, but bro, that's like it happens in cycles. It's not like every time we hit an all-time new high, we're just going to automatically melt.
Yep, done.
Yeah. So for now, you just keep following you just keep following the steps and your solidified points until we see a clear change of direction and a clear downtrend.
Yep, I'll stick to the steps. I just have
Yeah,
to
yeah,
like over and over again.
yeah. So
Practice.
literally just repeating this over and over and over again, bro. It's just training your eyes. It's just training your eyes to see it. And then, bro, you can see it clearly. Like you can see your first three steps, but then it's just gonna take more practice going into your smaller time frames and like into the 1 minute on like in the sessions.
The sessions, yeah.
Yeah. But then eventually your goal is to be able to see all this from this.
Yep, exactly. Yeah. Like a new
Yeah.
language.
Yep.
Yeah, but I just need to practice them more.
Yes, sir.
But it was a good call, bro. I'm gonna study this one. It was like,
Yeah, bro, this is a really good call. Yeah.
I'll study this. And bro, like, what do you think? I should like open like a top step like account or like,
Not yet. Definitely like study this, keep practicing, and then once you can start predicting the market good, like let's say you don't have to start placing trades like on an account or a practice or anything. Once you can see everything clearly from this, even into your smaller time frames, first is being able to see it, and then you have to predict it, because seeing this like this is different. Like seeing what's happened in the past is a lot easier than trying to see it live. So first you're gonna have to see it like from this, and then you're gonna have to be able to see it live. And then once you can start to go into the live sessions, and then you can start to be like, okay, it's about to go up from here, it's about to sell from here. Once you can start predicting the movements, and like you can consistently do that, then that's when I feel like you'll be ready to start actually placing trades. Because there's no point of putting in money if you can't, see it live yet.
yeah, true. But just I mean, just trying to risk for nothing.
Yeah, exactly.
No, but that's good, bro. This was a good call, bro.
Yeah, it was
And
really good, bro. It was good, bro.
again, bro, just like practice it more and yeah, put that work into it.
Yeah, but yeah, I'll probably go ahead and just stop recording.
Yeah.
And boom, this wraps up the first part. This was at the end of May, beginning of June, when the markets were just pumping, just kept making all-time new highs. If you like what you see so far and want me to teach you exactly just like this, your own personal one-on-one Zoom calls, live trade with me Monday through Friday, access to the exclusive private Discord, apply for the one-on-one mentorship down below in the description. Press the more button and the application will be down below in the description. Also, if you're looking for a good trustworthy broker, I got you. I've personally been using this one alongside with my good friend James Storms. We both use it. We have our own personal money in there. It's a broker that we use every day and we trust. They have MetaTrader 5 and TradeLocker. Raw spreads, fast withdrawals, a good trustworthy broker that I use. It will be linked down below in the description. Use that link for a 300% sign up bonus. Lock in, bro.
All right, boom. So look, let's say we're starting like completely from scratch. Like I'm at the point now to where I don't have to, go on like the daily 4 hour, but you pretty much always just want to pick a point that broke below something and then broke above, right? So like if I was on the daily, I'd be like,
Yeah.
this broke below this, broke above this. This broke below this, and then it broke above that, forming a new range. Like the first step is always wanting to find your what biggest range you're in, because it's like it may seem confusing. Like I understand and I remember what it was like at the beginning to where you're like, you just look at it from here and you're like, where the fuck do I start?
Yeah.
So right here, you always just pretty much want to mark out your biggest solidified points. So right here, like
Oh yeah.
4 hour, my biggest solidified points are this. Like you can see broke below this, broke above this. So you always just want to mark out your biggest points that broke on both sides on the highest time frame. Because if we start from a small time frame, like from here, you're like, where do I even start? Like there's so much stuff going on.
Yeah.
That's why I always recommend starting from the biggest time frame because you'll be able to find your biggest solidified points there. So you could see before, like remember, everything is like a book. You start from left to right. So you can see how we just kept forming new ranges. And then within this range, we were supposed to continue higher, but we grabbed this low, and then we were supposed to continue lower from this bearish range. From this high to this low, and then we failed. And then I don't know if you studied the other calls, but I've mentioned how this third solidified point to go lower failed. So then since this third solidified point failed to go to the downside, the other side is guaranteed. And NAS, specifically, since I only trade NAS, and you trade NAS too, right? Or
Yeah. NAS and gold.
Yeah, NAS. I mean, NAS and gold are a bit different, but it's pretty much the same thing. But gold right now is a bit on a downtrend.
Oh yeah.
Yeah, that shit's falling.
But hell yeah.
For NAS, bro, that shit's always gonna go up. Anytime there's a retracement, bro, like you can see obviously like 4 hour daily, like anytime there's been a deep retracement, that shit just goes right back up. So anytime there's a retracement, it's just a perfect, it's like a prices at a discount. It's gonna buy. So you can see right here from the bigger time frames, I always want to mark on my biggest solidified point. So pretty much right now, like this is kind of still choppy, but there's still good moves because like it'll range up, it'll range down. So to me, it's still been moving good. But all this,
like breaking structure.
Yeah. Like, do you know what range all this is in? Can you annotate? You should have a button somewhere in the corners where it looks like this. You press it and then you can like draw.
Oh, yeah. Yeah. I bet.
So can you?
So this area, right?
Yeah. Just make it black so I can see it.
All right. I bet. All right. So you broke this. Broke this.
Wait, hold on. I'm gonna delete the blue one. All right, go ahead. No, but can you show me what big range we're in? Like what all this shit right here, what range is inside of? Right. Okay, that's what you see. But what range is that in before that?
Oh, like going up and down?
No, but keep marking up where you're marking up.
Like this.
Okay. Keep marking it up.
All right.
Okay. Yeah. So you get the point of it. Yeah, you see your solidified points, you see your ranges, but what is this inside of? Can you tell?
Like, what do you mean this is inside of like?
What do you see here?
Uptrend.
But what do you see something in there? No.
Break of structures.
All right, it's okay. Look. Ready? Look. So like I'll draw it out again. You can see we broke below this, broke above this. We were supposed to continue higher, but it grabbed this low. Then we had this bearish range that broke below that low. Remember, the market always moves in ranges. From this high, this low, the third solidified point failed, broke above, then we broke above. So then look right here. We repeated the process all over again. You pretty much always want to use the steps, like draw out the steps from left to right. It's always like,
Yeah.
like here, look, I'll turn on my camera so I can kind of like picture it. This is funny. It's like my first time doing it. Like it's always like what I was explaining right here. This is inside something here. So like there's always going to be a range and then range, range, range. So it's going to be like a small triangle effect. So like, and then before this range here was in a bigger range before that, if that makes sense.
Yeah. Yeah. So
What
like
else?
this one's right here.
Yeah, pretty much. Yeah, that's going to be like, that's the next all-time high. So,
Cause I thought you were talking about like only this area.
no, yeah, it's okay. It's all good. So right here, you can see how we failed. And then this was a solidified point. Like, I'm pretty sure you can see this right here. Broke above, broke below, broke below.
Yeah.
Solidified point. So then now look how we made, this is like the first step, the new range, second step, the last push. And then you can see right here, broke below, broke above. So like this is a big solidified point here. So you can see like broke below, broke above, solidified point. And then once we broke that, that's when the deep retracement came. And then you can see how we formed the, on the bigger time frame, our third step. Boom.
Yeah.
One,
I see
two,
it.
three. So then now all this bullshit right here is in between this. And NAS
Yeah.
typically just tends to do this. Like you can see like when all the missile shit happened, it just shot up. Like this shit fucking trended for literally freaking over 2 months. Like pretty much over 2 months, it just trended up. And then now we had a deep retracement and shot up. And then anytime there's like a big move, there's always going to be periods and times where it's just kind of like going to consolidate. But I mean, there still has been good moves in this. Just obviously like on days like this, it's bullshit, but you'll see how it's still been like moving good. So you can see how we have 1, 2, 3. And then inside this, we formed this solidified point here. You can see broke above, broke below. Solidified point, break of structure. Boom. And we broke, we were supposed to continue higher from here, but then this is why, so then look, with this break of structure here, this formed the fourth step, right? So 1, 2, 3, came back to the last push, and then our fourth step is identifying our break of structure of a solidified point, boom, break. So then that formed the fourth step, finding the third solidified point. Pretty much your solidified low, your solidified high, and then your third solidified point, your break of structure of a solidified point inside the solidified range. So then now your fifth step is to simply repeat everything that we just did here on the smaller time frame, and then just go do that all the way down to like the 1 minute, right? So this is when right here we would go into like, that was a 1 hour. So then now I would start going into like the 30-minute 15. And then you can see how it's literally the same shit over and over and over again. So you can see here, like, boom, first step, your new range. Second step, identifying one of the last pushes that took out structure. Third step, the solidified high, boom. And then you can see right here, we just kept falling. And this is why you repeat the steps all over again, because technically on a bigger time frame aspect, you can see how we never broke above a solidified point. You can see how we never broke above a solidified point, because when you're dealing with bigger ranges, you need bigger solidified points. Like, I don't know if you've studied in my other calls, how I say the ranges and the solidified points and the breaks have to match. Have you seen that or not?
Yeah. Yeah.
Yeah. So you can
Like
see
the
how,
size has to match. Like
yeah, pretty much. Like you can't be on like, you know, a 30-minute range and then think that a 5-minute, you know, is break of structure is going to change the direction, because you pretty much need a break of structure to change the direction.
Yeah.
So then right here, we never broke above a main solidified point. And you can see, look, we grab this low here, but instead we grab this low. And then this is right now what's interesting to me that I've still been drawing out. But when it gets interesting like this, like I used to always kind of just not beat myself up, but like kind of be like, oh, it looks like bullish, you know, on the big time frame, and then on the lower time frame it's bearish, whatnot. But you just keep repeating the steps all the way down until you get to your intraday ranges, and then like for the session for that day. So what I was explaining about candle closures is that like today was a perfect example of candle closures breaking below or above a solidified point. So right here, this 1 hour closed a strong bearish candlestick below this low. And this is the failed third solidified point within this range to continue higher. And it's not showing significant signs of bullishness. So it's interesting that like you can see how we're slowing down, you know? But like for NAS to have a like a strong downtrend is very rare. Like there is deep retracements and we kind of are due for one, but we just have to see. Like if it keeps closing below these lows, yeah, we're gonna, you know, have a deep retracement. But then like look at this for this instant. You could see how from this high to this low, we retraced for a week. We had a steep retracement, but then once we grabbed this solidified point, we just shot right back up. And then you can see this. We grabbed this low and then they're just shooting right back up. And right now we're kind of just like ranging side to side. So yesterday when I was doing the call with the new student, like let's say now I'm in like my 15 minute. I'm like, okay, just like what you described, technically we are in this bearish range, just like what you drew out. But I like being in a bullish market. I like bullish solidified ranges. So I always try and look at the market within a bullish range. But you know, everyone sees it different. Like even today, the sells that I caught sells even in a bullish solidified range from a failed third point, if that makes sense. Like even
Yeah,
for
it makes sense.
sell, I like for it to sell from a failed range going up, if that makes sense.
No, it makes sense. Yeah.
Yeah, so you can see right here, like I'm just marking out like my big solidified points, right?
You don't believe me or what?
What happened?
You don't believe me or what?
What do you mean, believe you what?
I know what you mean. Like the third point, it failed to pass. So after that point, you were selling, right?
Yeah. Yeah. So right here, you can see this is like a key solidified point, and then we touched it right here. So I'm like, no, but this is before. When I did the call yesterday, look, I did the call, and I'll send it to you so you can see. It was like I'm breaking down the same thing that I broke down again here, but it's all good. But yesterday when I did the call, it was here. So this is pretty much what I did yesterday. I was like, okay, price is here. Let me start marking out on like the 15 minute how I would mark it out. Because the guy was pretty much just, he was also like, where do you start from? But he was like he just started. So you can see right here, I'm marking out my solidified points. So you can see, look, broke below, broke above. And then even if I'm on like on the 15 minute or 5 minute, I always still identify like what are the main points that broke on both sides, like the biggest ones. Like you can see right here, like I'm not on the small time frame, you know, marking out all this small shit, you know, like I mark out my main solidified points. Like this one, you know, broke below, broke above, boom, broke below, broke above, solidified point. So I saw how, and it always matters. Like whenever I get this detailed, I press the command button and you can see how it like turns into a magnet.
Mm-hmm.
When I get this detail, I put the magnet on the high and I'm like, okay, this right here, this point didn't take out this high yet. So this is still like a key point of liquidity right here. Because you can see it's like a main solidified point, broke above, broke below. So this is a main solidified point. And then it's very rare for NAS to like just melt from this point. Like there's no even though we quote unquote made a breaker structure to continue to the downside from here, like this bearish range isn't strong enough to just for it to just completely melt from here, you know? So I still look at it as bullish. So I was pretty much doing it like this, from this low to this high. And then you can see how it was repeating the steps all over again. And can you see the steps from here or no? Like from that
So-
arrow that I have drawn out.
So this would be like. Let me think.
And I'm asking you these questions because I'm seeing how much
So
you studied.
this is a. All right. Yeah.
Because I know you've been studying these videos
15 minutes.
for a little bit of time now.
So this is a downtrend, right?
Oh, but
Like this is for
like
sales.
what I just drew out from this arrow,
Hmm.
from this low to this high, do you see the steps?
So right here will be break a structure, or two, and then one. But we didn't break this, so wouldn't this be three?
Why is your 3 right there?
Because we didn't break this line right here.
That
Or
is,
that's not it.
but then why would you put the 3 right there?
Because we didn't break it, didn't we?
Yeah,
Or
so
we did.
pretty much, no, it's all good. So the way that I was seeing it was from here. Like you can see, there's a reason why I have this marked up. You can see we broke above, broke below, and then this point also, like, you know, quote unquote, made a liquidity grab. Like grabbed this low and then just shot right back up. So pretty much my first step would be from here, from this solidified point. You can see, boom, broke below, broke above us of a solidified point. Second step, one of the last pushes, right? Like 2 right there, second step. And then third step right here. Even though we didn't break above this solidified point here, we still made a solidified point here. Because you can see, look, broke below, broke above, solidified point, break of structure, and then we had the retracement.
Oh, okay.
So you can see the steps here. 1, 2, 3.
Yeah. Yeah, it makes more sense. Yeah.
Yeah, 1, 2, 3. And then you're following the ranges. So you can see we had the little retracement, came back down, and then look, picture perfect 4-step. Can you see the 4-step right here or no?
Forced. Wouldn't the force step be like right here, around this area, breaking structure?
Yeah, but where is it? Where did it break a solidified point that made it change directions?
This one.
Yeah, but there's one before it. Where did it make it follow? Here, look, maybe we can zoom in more. Follow this range down, and then where was the continuation break? It took out the low, it formed a solidified point, and then broke to the upside. So where was pretty much the last point that didn't get touched? Like the last low.
Right here.
Mm-hmm. Yep.
And then we broke this.
Yeah.
And then right here was the last push.
No.
Right?
The last push comes before the break.
Oh, so right here where the lines at right here?
Yeah. The last push, the second step always comes before the break. So like it would be like right here, like quote unquote, this would be the last push. But you can see how sometimes NAS, it just doesn't retrace. And then this break of structure didn't even come. Like this happened during Asia session, but you can see how like it doesn't matter about the session. It still follows the checklist and the solidified points. You can see where boom, broke above, broke below, following these ranges, this high. And then what I was explaining how these lows right here, like if I zoom in, because right now we're in the 15-minute. Like if I go on the 5-minute, it'll match. But you can see how we broke above, broke below, and then you can see how like we're kind of just falling, formed this bearish range here from this high to this low, then boom, formed another range. And then you can see after we broke that range down here, you can see how price has kind of just been falling. Like it kind of just looks like it looks like this.
Like shoulder, head, shoulder. I don't know.
No. But you can see how we have a high, but look how we don't have a low yet.
Oh,
Like you see,
okay.
look, we have a high, but look how we don't have a low yet. You see what I mean right here? Like right there.
Yeah.
We don't have a low
Yeah.
yet. It just looks like a stick. We haven't formed this.
Yeah.
And then for our fourth step, we need this, confirming the low. It gets taken out, solidified point, and then we need this. So remember the first break and what I was explaining, how the highs and lows on the time frames have to match. So you can see right here, look, this first break here, right there, on the lower time frame, it may seem like a break of structure because you're like, oh, like it broke all these little solidified points here. But remember, we're dealing with the bigger range. Like this is why you always have to focus on the bigger range, because that little break right there isn't what's going to change the direction from this big range. Because remember, before here, we're here.
Yeah.
So the first break is always a continuation break. And then look, boom, it got taken out. So then now you can see we broke.
But then when
What?
then like you said that like it has to like fill up the candle for it to break.
What do you mean fill up the candle?
Like it has to stay black the whole candle. Like
Yeah,
this whole
like
thing
it has
has to like
yeah, it has to close the candle. The way the candle
oh yeah,
closes
close.
matters.
Yeah.
Yeah. So you can see right here, look, broke above, broke below. And then look, also another key example of just what you explained. Like did you draw that out right there?
Yeah.
Yeah, exactly. So look, just how what you drew out right there, you're like the candlestick closes. And then this is, I didn't even realize this, but look, this is a key importance of candlestick closure. So look how below this low, look how the candlestick didn't close fully bearish, especially on the 15-minute. This 15-minute, and look, I'll zoom in big right here. Look how we never even closed a candlestick. Like the candlestick didn't close, it only wicked.
Yeah.
So like it didn't go like this. Like you see that?
Yeah.
It didn't go like that. So instead, we didn't even close below, and then we just wicked, and then pretty much made a liquidity grab, like broke a solidified point, and then from there we just shot up. But this happened during Asia session, like Asia before London. So we shot up, and then now we broke a solidified point. But in this case, like we never even had a retracement. Like that shit just shot up. But like in my case, I don't trade the session, so I mean I don't really care. But then you just keep riding the wave, like broke below, broke above. You just keep following the range that it's in. And then this New York session, that shit was choppy. Oh yeah, CPI. Yeah, I remember. CPI came out. I was within, yeah, boom. And then before, yeah, CPI came out at 8:30 a.m. So when CPI comes out strong like that, like typically the New York session isn't gonna move clean. Like you can see how this candlestick jumped like freaking 250 points in the span of like 30 seconds. So whenever major news comes out like that before market open, look how market open, like the New York session is gonna be. It's just gonna be like choppy. It's gonna be shit.
Yeah.
So I didn't trade CPI, and then I didn't trade that. I was like, bro, like already from experience, I didn't know the market's gonna be shit. So I was literally right here when I did the call with the guy. I was like, okay. So the last point we broke was like broke below this, broke above that. And I saw how we were forming the steps from a higher time frame. I was like, okay, now we formed the fourth step. 1, 2, 3, form the fourth step, boom, broke above. And then now I was like, okay, now we're gonna be waiting for this. This low broke below this. And then I'm gonna be waiting for it to break above this and then form a solidified point, a third point, retrace, and then from here we're going to be looking to buy again. That's exactly what I marked out, and then I'll send you the call so you can see it, and then look what it did. Literally to a T. You see how I copied and pasted like where the fuck I drew it?
Damn, I didn't even notice it.
Yeah, see? Boom.
Nah, hell yeah.
Yeah, see, bro? Boom. Like bro, it's literally rinse and repeat. But I thought it was going to retrace before it touched that high, but it barely tapped it. So it did tap that high.
Yeah.
But you can see how it literally just follows the steps over and over and over again. So then now you can say, oh, look, broke below this, broke above this. And then on a smaller time frame, I'm following everything now. Look, you can see, look, continuation break, target, solidify point, break of structure. So before New York session, I was here. Yeah, right before New York. So I was like, okay, perfect. I was like, New York formed, and then now technically we already completed this range here, and then now we're dealing with the new range. So then now this is like my solidified low, and then now this is my solidified high. But notice how we pretty much just wicked it. Like a candle closure didn't close above it. So I knew a retracement was gonna come. And I was a bit going into the session right before New York. I saw this. I'm dealing with this. So now you're about to get into like, now that we went over the whole thought process of like how I marked it up from like the big time frame to now you're gonna see my thought process of like actually entering a trade for New York. So this is why everything matters. Like, and it's gonna seem confusing right now at the beginning because you're like, what is this man talking about? But once you get more experience and you understand the strategy, solidify points, the ranges, etc., you'll see what I'm talking about. You'll kind of just get an intuition. You can see how, look, we broke above this, broke below this, and then this on paper is a solidified point, right? This is our third solidified point to continue higher. But based off of all this, how we just completed this new high, we formed the third step to retrace, and then how we didn't even close like a strong range above. Like if we would have formed a new range like this, and then we formed a retracement, I'd be more lenient on the buys, But then look how we barely touched it. So I'm following my ranges, but I was like, okay, let's see how it plays out. And I wasn't lenient on the buy, but I was like, let's see if we make a break of structure. Oh yeah, that happened. Quick, hold on. So price, yeah, was here. I'm gonna go on 1 minute. And I'm like, okay, what is it about to do? I was like, if we close below this and actually close like a candlestick, not a wick, we're gonna fall. And look what it did. I was like, I'm waited for market open. And then I see this. I saw how I was like, okay, we touched that low, but then now we were waking up. Oh, let me go on the 1 minute. Yeah, we touched that low. So now I'm on the 1 minute and I'm like, okay, the third point, quote unquote, failed. And I was like, we didn't break below it. You see how the candlestick didn't close below? I was like, okay, we could liquidity grab to continue higher. But then look, I was patient. And then boom, when you form a liquidity grab, we shouldn't close another bearish candlestick like that. Like it should just grab that lower than just shoot up. So then I saw it struggling to continue higher. But like even after this, once I saw this candlestick close below this, I was like, okay, even though it wasn't like a full candlestick, my bias towards the upside was already not as strong because like what I just mentioned, if it forms a liquidity grab, it's just going to shoot up. And then once I saw this close right here. Once I saw this close again below this, I entered off of the, like I caught an entry here and then boom, it melted. And then boom. And then this was the failed third solidified point from this range, and then it failed. So just what I was explaining earlier, even I always like buying. I always like being in a bullish market, but the only time I sell is if it's within a failed bullish range. So look how this was a bullish range, but then the third point failed to continue higher. And then with the candlestick closure confluence, this should just melt it.
Where did you put your stop loss?
Stop loss was right here. So once that candlestick closed, I entered here, and then my stop loss above here at the next solidified point.
But then you said, I saw one of your videos. It was saying like, once you're in profit, You go to what's it called?
Break even.
Break even.
Yeah.
Yeah. So you didn't put a break even in that one or what?
Yeah, I put a B.
Oh,
And then, bro, my take profit was right here, and I was freaking being greedy, 7 points away, hit my B.
damn.
I was 7 points away because I was like, I was just aiming for this next low. But it's all
Yeah.
yeah, so pretty
Yeah,
much I
makes
was
sense.
doing this. I was going for this. Boom.
So you got the take profit or here stop loss?
No, I hit my BE because once I saw it fall,
Oh,
I went break even, and then it
it
hit my
came back up.
BE, and then that shit just melted.
Yeah. All right.
But it's all good.
No, yeah.
But you can see it always plays
That's
out.
why you do your priming.
What happened?
That's why you do your priming.
That's why, or what do you mean?
Like so, like it won't affect you. Like once you lose a trade, like you feel like
Yeah, I mean, I'm
you
chilling.
don't need
I hit a
like
break even. I didn't lose, you know.
no, yeah.
And boom, that wraps up the next part. If you like what you see, make sure you check out the links down below in the description. Imagine if you had me alongside your journey to teach you just like this through private one-on-one Zoom calls. Lock in, bro.
All right, let's go. All right, boom.
All right, so basically started out by marking out like the high and the low from the previous session. So this is like London, right?
Mm-hmm.
Started here, got one, that last push, moves above, third step. And this is on the the higher time frame.
Mm-hmm.
So because I'm on the 1 minute, but I can, or wait, would that be correct
What?
for like the higher time frame? Let me see actually. Oh yeah, that's exactly what I did. All right, sorry about that.
You good?
Third step, and then there's a break of structure right here, then a push below. But before that, I kind of had a feeling that price would like come down to this low, but that was like early in the session, so like before 10. That's when I noticed this.
Okay.
So yeah,
And what were you looking at it before market open or no?
I was looking at it before market open.
Okay, nice. And what were you thinking?
Well, at first, I wasn't really sure which direction price was going to go. Like, I wasn't sure if it was going to go higher or not. But once I saw this point get formed, I kind of like was like, okay, price might actually move downwards and then take out this low from uh like earlier in like London session.
Hmm?
So was that like the right kind of thinking or is
Mm,
that way off?
I mean, it happened. But
Okay.
my analysis, if you want, I can bro, your Rangers are good.
Okay.
Rangers are looking good.
Okay.
Yeah. And then now it's just gonna be about piecing it all together. So I sent you, did you study the calls I sent you 2 days ago?
Yeah, I did. I've been
Okay.
watching like the video where you're going through different time frames over and over.
Nice, nice. Yeah. The one with the Ram, with the Ram is very good because he asked the question of like, oh, why did this 5 minute bullish range fail? And then you can see how instead of just going over the 5 minute range, I broke it down all the way from like the 4 hour, broke down every single range until we got to that 5 minute.
Okay.
So if you want, I'll go ahead and share my screen.
Yeah.
All right. All right, boom. So yesterday, I didn't freaking catch anything. That shit just shot up like crazy. Like this shit just freaking shot up. So pre-market open, this was pretty much my analysis. I was like, Yeah, we can see, yeah, like 9:20 a.m. I can see right before market open. I always start from like I always know where we're at, but I always start from like the 4 hour, like sometimes even daily, just to look, just to get a overall idea of where I'm at. So it's like 4 hour daily. And then before like coming into the market fresh, I was like, okay, we are here. And then I was like, where are we at? I was like, so my first thought was, okay, this is the next big solidified point. Let me see if we actually hit it yet. Yeah, I'll just go and delete all this right here. I was like, okay, boom, we have all this. Let me delete all this shit. I was like, okay, you can see how this is a big previous solidified point. So I was like, okay, have we hit that? So whenever I want to get specific, I use the magnet. So I press and hold command. And I'm like, okay, boom. And I put it right there. I was like, okay, based off of this, I don't know if it hit it yet. So I was like, okay, I can see we're right by this high. So then that's when I kind of go into my 1 hour and I'm like, okay, have we hit it yet? And I like zoom in very good. And then I see that, okay, we already touched it. So I was like, okay, perfect. So then just based off of this, now I went into my 30-minute. Freaking load. And I'm like, okay, what range? Like, where am I at? So I'm like, okay, where is my biggest previous solidified point? You can see right here, I'm marking up on my new ranges. You can just see this shit just freaking shot up. So the range that we were pretty much in was, you can see how this broke below this, broke above this, boom. So then we had this low to this high. And then I was like, okay, we're in between this low and this high. And then pretty much you can see on like 30-minute, we broke above this big solidified point here. So I was like, okay, let me start going to like my 15-minute, 5-minute. And then I was like, okay, what are we gonna do? I was like, okay. So from a smaller time frame aspect, we're in between this low and then this high. And then you can see how pretty much like within London session, the third solidified point, the break of structure that changed directions was already here. From this low to this high, third point, it shot up. And then this was like another solidified point. Boom, we broke above that. And then right here, we have these little, like just choppy ranges that you can see like this right here is just choppy. It's not something that I'm confident in. So I'm like, okay, let's see what market open does. But I was thinking the way how market opened the day before, I was telling myself, I was like, the way how we just took out this big previous high, we're in this bullish range, we're very close to this high. I was like, we're just gonna shoot up. Like my natural, I guess, instinct was, I was saying we're just gonna shoot up. So I was like, okay, let's see for market open. Boom, it shot up. But it didn't really, I didn't catch an entry right at market open. So then, oh here, look, let me see before market open. Yeah. So then right before market open, I always go to like the 1 minute, but only until like you can see like I broke it down all the way from like the 4 hour, 1 hour, 30-minute, 15-minute, 1 minute. So then right here, I would go into like the 1 minute. And I'm like, okay, these ranges aren't clean. Like I would never look at placing a trade in between any of these ranges, just me personally. Like anytime I place a trade, or I don't know if you've seen in my calls, anytime I place a trade and anytime you place a trade, you should be confident, like almost guaranteed knowing where it's gonna go. So it's like, okay, this is like, even though I'm confident that we're gonna push up, it's just not a clean setup. Like no matter how much confidence you have it's gonna go up or down, you always want to enter based off of your solidified points and your steps. So I can see, oh, and then I saw, yeah, right before market open, yeah, literally at like 9:27, that shit just shot up already. I was like, damn, this shit's already shooting up before market open. So I was like, okay, at market open, we might just freaking shoot up. So we just kept spazzing out, and then I saw how we already took out this high. We already took out this high. So I was like, okay, now we completed this bigger range. Because remember, the market is always moving in ranges. So I was like, okay, now we completed this low to this high. We already completed this big previous solidified point. This range took it out, and then now we took out this bullish range. So then I had entered a buy, like once I saw this push and then a retracement, I entered a buy here, expecting price to just continue up. I was like, okay, if price is gonna keep going like this, we're just gonna keep shooting all the way up, like way past this. Because like you can see how now it's like, bro, when it's bullish, it's just bullish. That shit just flies up. So I entered a buy here, kind of more of just like instinct and momentum. Like I just figured I was like, okay, we're just gonna keep shooting up. I don't want to miss a move. I entered a buy here, shot up, and then it hit my break even. And then I saw it form this range from this low to this high. And then I was like, once I saw this, but it happened very quick. I saw this forming. I was like, I was like, once it came to here and I saw this, I was like, okay, we could keep pushing up from here, which it did. The buy did come from here, but none of us caught it because it happened very quick. But you can see how, like on the 1 minute, if we were going to the seconds time frame, which is like very advanced, you can see how it pretty much formed the steps here. Like new range, came back last push, break of structure here, and then boom, BOS. But then you would have had to enter straight off of the break of structure, and your stop loss would have had to been like from entry here, stop loss here. So this is a good size stop. But so then I was like, okay, it's gone. Price is gone. So I was like, okay, let me keep following my bullish ranges. And then I see this. I was like, okay, we formed a new range from this low to this high. And I'm always following the ranges. And then I like waiting. So pretty much you can see how it always forms the first three steps, like pretty much on repeat, like the new range, the last push, and the third step to the retracement. I always like trading in my fourth and fifth step because that's more guaranteed. Because sometimes if you're trying to guess the third step, like you're thinking a break of structure is gonna reverse it, but then it could just continue up. And like I burned myself a lot of times at the beginning, thinking that every single break after a new range was gonna reverse, and then it would just keep going up. So I like being in the middle of a range versus trying to always catch the retracement. So I'm analyzing all this. I was like, okay. Then I saw this. I was like, okay, we had this solidified point, and then it broke right there. I was like, okay, it broke, but then this right here was a big, like, I would not enter off of something this big off of a break this big because you can see that this range that broke this is 64 points, which is a good amount. So I waited for retracement and I was gonna wait for like another little break of structure, but then that didn't come. So I was like, oh shit. But instead we failed. So then, oh shit, didn't want to go that far back. So then once I saw this fail and then I saw it close like this, now have you heard me talk about my failed solidified points? I mean the third solidified points that fail?
Yeah.
Yeah. So you can see how, so always based off of the higher time frame. So I can see right here, remember we are here. We just broke above this big solidified point. Like you can see this is like a major key solidified point. Like you can see we touched it here, touched it here, touched it there, and then we broke above this, broke below this, and then boom. So this is a major key solidified point. So the market moves in ranges. So if that already got completed, and then this range here got completed, that means like we just keep following our bullish ranges. And remember, the market should keep going up within the bullish ranges. So if this is really supposed to continue higher and be bullish, the way how bullish we were, it should have continued higher from this break. Because you can see how we just kept forming new bullish ranges, and like I can draw out the steps right here. So you can see like I'll draw out the steps here. You can see like here, look, boom. First step, our new range. Damn, that shows ugly. You can see right here, like first step, our new range. You can see right here, second step, the last push that took out structure. And you can see right here, third step, our solidified high that brought the retracement. But for me, I don't really care about the third step or the second step. These are kind of just like the second step is a reference point, and I always want to see the third step already retraced. Like I like being here. Like you can see how, like the students that I was trading with today, they saw how I was like waiting for this to set up. I always want to be in between this and in between a low and a high. Like I want to be in my first three steps already. That's more guaranteed.
Okay.
So you can see right here, we broke above, broke below. We had a solidified point here, broke above. So this was our quote unquote fourth step. This is our, well, not quote unquote, this was our fourth step, our third solidified point to continue higher. So then the fifth step would have been to repeat everything here all over again, which you can see how I explained, like I was waiting for this to set up again. Like you can see first step, new range, second step, last push, third step, the retracement. And then right here, I was waiting for like another break of structure to continue higher, but instead it failed. It failed. And then also you can see how in the new videos I've been talking about the candlestick closure.
Mm-hmm.
So I look at the difference in between this candlestick, which was a wick. You can see how the body didn't close at all. Instead, we wicked and then shot up, and then the candlestick closed bullish way above. So you can see how we like the body didn't close fully below this. So look at the difference between this candle and then this one. So you can see how the body completely closed bearish below it. And then this is the failed third solidified point of this range. And then in confluence that we just broke above this big solidified point. So I was like, okay, we just broke above this big solidified point. We are kind of due for a retracement. And then the 1 minute bullish ranges are failing to continue higher. Because if this was really going to be bullish, like you can see how, bro, when Nas is truly in one direction, there's no like choppiness. You can see it's like a clear direction. Like you can see this day, boom, clear bullish direction. This day we had a spike down, but then clear bullish direction. This day you can see was a retracement, clear shot down. You can see here, clear shot up. And you can see here, like at market open, clear shot down, and then we went back up again, shot back down. But you can see how when Nas is truly going to give a good move, it's one clean move. It's not really going to be like sporadic or like kind of bullshitting, you know? So with all that being my confluence, and then the third solidified point to continue higher failed. So I was like, okay, boom, we're about to sell. So then I just repeat all the steps all over again from a bearish range. So then now this is my bearish range from this high to this low. And then I wait for the retracement. And then I entered here once it broke below this low. Like this is a bit more experience, but you can see how like it's pretty much the same thing, like high, low, break of structure of a solidified point. So you can see how, look, this was our first step, our new range, second step, last push, third step, the retracement, and then here was the break of structure. So it wasn't clean here, but then you can see how like I just knew like this is just kind of from more experience that once we broke below this and this candlestick closure, like look how that candlestick closed, I knew we were about to melt. So you can
Okay.
see how the candlestick closures are very important. And then boom, it melted.
And where did you take profit at? Like, how
I
did
took profit like right here.
Okay. And what told you to do that?
I just wanted to go in and out there.
Okay.
But yeah, I entered like this. Boom. But then like the immediate take profit would have been within this range. Why? Because all this was inside this bullish range.
Okay.
So you can see how after we closed below that, that's when we had a retracement. Why? Because we then formed a new range again from this high to this low. And you can see it kind of repeated the steps all over again there. You can see from this high to this low, had a retracement and then shot back down.
Okay.
Boom. And then, bro, tomorrow or maybe for Asia session tonight, it could just keep retracing because then now, look, we broke below this.
Yeah.
So we failed to continue higher. And let's see how like the 4 hour close. So yeah, you can see how we're pretty much forming a new range. And then now from like the bigger steps, you can see how look 1, 2, and then now we're forming 3. Yeah, look at that. Boom. So now it looks like we're forming up, yeah, like a 1, 2, 3 in between this range.
Okay, and like, could you just explain to me like how do you take all of that into account with like the larger range, like on the 15-minute or 30-minute?
So you always like you could see how I started from my bigger ranges and then I broke it down from like right now it's gonna seem a bit confusing, but
Yeah.
this is why I record the call because you can see like pretty much the question you just asked. I just explain everything.
Okay.
Yeah. But you could see like this was a really good call because I gave you my thought process of like before market open and everything, and then why I waited for that setup. Because my student, I don't know if you've seen like my student Antoine, but we caught the same exact trade. I think we caught the same exact one. Really, oh, that shit should look ugly. So yeah, so then your goal is to be able to see all that through this.
Okay. And where would you say I am, like, in terms of like the stage of
I mean, bro, you're understanding the way that you're marking up all the ranges. You're definitely understanding it quick.
okay? Because I thought I was like way off with everything.
No, no, no. I saw the way you were marking up everything. Is you're
Okay.
understanding all the ranges correct? Now it's just about placing it and doing it live. And then just getting the practice. Like you can see how like when you first started studying these calls, you were probably just like, bro, what the freak am I looking at? You know, like what is this
Yeah.
talking about? But then you can see how once you watch it over and over and over again, it just slowly started to click, you know? Like you were just like, oh, okay, like I see this is the first step, second step, third step. And then now what you were just explaining is, I guess, because it's easier to see from the bigger time frame. And then that's why I always tell my students to the higher time frames are always the most important. So not only are they most important and they're also the easiest to read, but then it's about like where people get confused is like the next stage is being able to go into the fourth and fifth step. What you're talking about is to pretty much into the lower time frames.
Okay.
But you can see how like from this call, like before I went, because you pretty much went straight into the 1 minute. Because I was just like, oh, let me see how you would see it. And you went straight into the 1 minute, which
Yeah.
is like it's okay because you already had it marked up, but you could see how for me to before even going into like the 1 minute into any small time frame, you can see how I broke it down from the 4 hour.
Okay.
Like I pretty much always start from the 4 hour. I always know where I'm at. What because like if you only look at it from this, like oh, like you would think, oh, this is like hella bullish. Like we're bullish, you know, like even if you look at it on like the 3 minute, you know, we're like, oh, we've been bullish, we're just gonna continue to go higher. But if you don't understand that on a bigger time frame, we're here, and then you break it down from this, then that's where you have more clarity and more confidence.
Yeah. Okay. I see
Because
it.
my confidence in that cell, even though I was doing everything from the 1 minute, my confidence came from knowing that we just broke above this bullish range and then we could retrace. Because I was like, if we're not going to have a strong push to the upside, we could be forming the third step on the bigger time frame range to then retrace it. And that's what we did.
Okay.
And then even entering off of solidified points, I mean, I only enter off of like my ranges and my solidified points. And like I gave you my thought process of like what I was waiting for, etc.
Okay.
Yeah, it was a good call, bro.
Okay. Yeah.
I cooked.
And then, yeah, you did cook, but I just have one more question,
Yeah.
right? So it's like I feel like I'm marking up every single little point that breaks above or below. Would you
Mhm.
recommend that even for like the higher time frames?
Yeah, yeah. But so always start from left to right. Like you
Okay.
can see how that call that I did with Aram, it was yeah, we went over this range. Like you can see right here. Like the call I did with Aram was very good because he was pretty much like he went straight to like the 15-minute and the 5 minute and was pretty much asking me, he was like, okay, I'm here. And then wait, where was it? Yeah, yeah, yeah. No, we were here. He was like, okay, we were in this range. So like from the 5 minute, you can see how this looks like a perfect bullish solidified range. Like you can see how like we broke above, broke below, we had the solidified low, we broke above this previous new high, And then you could see how we formed this. And then he was like, why did it not continue higher from here? And he even went into like the 5 minute here. He was like, why did this bullish range right here fail? And I was like, me, because I already knew where we were at. And I was like, oh, these cells are freaking perfect. So instead of just explaining them why this failed, that's when I went into the 4 hour and you can see I had him break it down like all the way from here, like from this range to this to this. And then we went into like the 1 hour, 30 minute, 15 minute. And I had him mark out all these ranges. And I explained this candlestick closure. I explained how this didn't fully close above this. And then after I broke down all this, then we went here into the 5 minute and I explained why it sold.
Okay.
So just always start from left to right and then don't skip, like literally always, like just always start from left to right, and then don't skip. Like if you're going from like here to here, don't mark up something over here before marking up every single thing from left to right.
Okay. Yeah.
So you can see like literally just go like this, like always go from left to right. And then just mark out also to mark out your the biggest solidified points, like the biggest range is the biggest solidified points, and then go from there first. Because if you go straight into like the 1 minute, 5 minute, you can see how like there's so many ranges and it can get confusing because you're just like, okay, which one's correct? Which one do I follow? But then that's why I always preach going into the higher time frame first.
All right. Thank you so much.
Of course, bro.
And boom, that wraps up the next call. You can see how every student has their own one-on-one call dedicated personally to them. If you like what you see, check out the links down below in the description.
You want me to clear all this and then we can choose a spot and show you what I got?
Oh, whatever you want to go over. I mean, that scenario you had right there was good. That should just fail. I saw that when I hopped on the session. Yeah, today. I saw how yesterday afterwards, I was like, damn, that shit failed.
Yeah. It could be our number one range.
Yeah.
And before that, number two.
Yeah, but then now for some reason now it's doing some BS because bro, like, yeah, so we're from that range to this low. But then we kind of already had like the third point to go lower, which you can see we melted from here. We're supposed to take this out. And then now it formed a breakup structure to continue higher. And then we broke above this. So it's like, why is this shit not melting? I feel like it's in like going like the 15-minute 30. Or even yeah, like the 30. Yeah. And then yeah, you can see how we rejected off that big low. You see what I'm talking about?
What, this one?
Yeah, we made a liquidity graph from there. Oh wait, no,
No, we didn't.
we
went a
didn't.
little below.
I was talking about, yeah, I was thinking about this one. How this one, yeah, from the session.
But this one was a liquidity grab, right?
Put the magnet on it.
Like this shit down here.
Yeah, did it touch that low? Yeah. Yeah, exactly. Yeah,
Yeah,
that was
the one
that was a big
right
4 hour
before.
liquidity grab I was talking about.
Yeah.
And then it should have shot up, but then now it's failing. So I feel like right now we're in a tricky position to where it could be bullshitting for like 1 or 2 weeks to where it's gonna go up, down before it finally chooses a direction.
Because it took out this low, right? And then
Yeah.
still went down below. Didn't shoot up yet. But I mean, liquidity grabs, isn't it supposed to be like the body of the candle? But I mean, it's a wick.
No,
Or
yeah,
is
that's what a liquidity grab is. It closes as a wick, you see the rejection, and then it breaks above a solidified point, and then boom.
But when it touched it, this is still a wick, no?
Yeah, that's a liquidity grab.
Oh, it's supposed to be like that.
Yeah, it's supposed to be a wick, yeah. Because a wick shows rejection to that to the downside. Like, and it just touched it. It didn't fully break through it.
Gotcha. Okay. Okay, about can you tell me some like important rules to know?
I mean, pretty much, I always like to save you the least amount of stress. Like, don't try and look for setups now because it's, 5 p.m. EST right now. Like no setup is pretty much valid right now. But even then, when the market closes, it shot right back up. But even then, that's what I'm saying. Obviously, you want to stay within one session and then identify your solidified points and then wait for a candle closure above or below like your third solidified point.
Yeah. It's gotta be a candle closure, it can't be a wick.
Yeah.
Okay, yeah. Okay. Um, you see anything that we should I don't know talk about? Nice, some weird shit.
Well, I don't know. That's why I thought you said you had like scenarios you wanted to go over.
I mean, I pretty much wanted to know like how to, enter correctly. And yeah, it is based off the, candle closure off the third solidified point, but sometimes it fails. So that's why, like, even sometimes you'll do like you'll break it, but it won't really.
Yeah, like give me a scenario you want to go over.
Okay, so pretty much this will be like the range, last push, third point. So I want to talk about this failed fourth point. See how it's a
Yep.
solidified point, and then it broke it, but didn't quite go back up. So you know why I failed right here?
Yeah, do you know why I failed or you want me to go over it?
Um, can you go over it?
Yeah. So minimize it so I can see like the whole overall chart. Yeah, yeah, yeah. All right, boom. And if you want, hide your wish list.
Was all this
No, 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 this.
wish list? What is that?
Uh, like click on this right here.
Oh, this shit. Oh,
Yeah.
okay. Oh,
Yeah,
there it is.
boom. Okay. Okay, yeah. So that was yeah, bro. You gotta be okay. Yeah, now I see everything. Yeah, you gotta be focused more on the bigger time frames, bro. Even then, like I saw how you went from the 15 and try to find that range. Like, because before I was like just based off of the 15, I knew why that range failed, but then it's from a bigger aspect of why it failed. Oh, and I think I went over on the call with Jurgen, but I didn't send it. Yeah, I went over this already. I'm pretty sure I went over this on the live call. Oh yeah, so minimize it so I can see more of the chart. No, 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 the other way.
This way.
No, going like the 30-minute. Yeah, yeah. Now press the auto. Yeah, yeah. Now press the auto.
That shit is, where is that, bottom right?
Yeah, right there. Okay. So can you show me the bigger ranges first before all of that?
Yeah.
And like make it smaller so you can see more. Yeah, boom, exactly. Yeah, yeah, yeah. You want to see the bigger ranges first. Like I noticed I could see probably why you're failing, bro, because you started from the 15-minute and you try to show me a range from the 15-minute. Like I always break it down from the bigger ranges first. Like the bigger ranges, the 1 hour ranges.
Okay, you want to see a 1 hour range?
Yeah. Yeah, so before you got to that range, break it down from this. Before getting to that first range that you showed me, break it down from this.
Okay.
Now remember, always start from left to right. Always from left to right. It's like a book. It goes from left to right.
So keep doing these ranges.
No, but you already marked out this range. You already marked out this. So what comes after this? After you drew that, what comes after that?
And then it's on comes.
Yeah. Yep. Yep. And just keep going from left to right. Why'd you draw that in the middle?
This one?
Hmm.
Um, I mean, it's like far apart from the previous range and it broke below.
All right, so before that one, erase that one.
Uh-huh.
Draw the steps out from that one, that last line that you drew out.
Okay.
Hmm.
Yeah, pretty much. And then yeah. So yeah, all the steps were supposed to repeat there. But then did that high take out that high or no?
Yeah,
Yeah, it did. Boom. So it got completed there. Boom, it got completed there. And then from a bigger aspect, it broke that low, that solidified low.
which one are you talking about?
Which one do you think it broke first? Remember, it starts from left to right. So after we took out that high, which big solidified point did it take after? After we took out the high from 3. Yeah, boom.
Broke this low?
Yeah, yeah. Remember, always start from left to right. Always left to right. Yeah, it's funny. Yeah, boom. Yeah, that's exactly what happened. How it played out. But it's funny because I didn't even look at it like that. But that's exactly what happened.
How'd you look at this?
Now from no, but that's correct. Like that. That's correct from that bearish range.
Yeah.
Yeah, and you can see right there. Boom, it melted. Boom, and then it reached that third point. And then what happened after?
Reach this and then drop back up and take out this high.
Yeah, boom. Yeah. So then, and then what is this? This new bullish range that you marked out, what is that inside of?
That's inside of this solidified point.
Yeah, no, it broke out of that solidified point, but where is that range inside of? In what like what bigger range is it inside of that range?
Oh, that is that's inside of this large one.
Yeah, yep, exactly. Boom. So then that was pretty much like the fourth step from
Yeah,
that
that's
big
like
range.
the main big four step.
Yeah, yeah, yeah. And then this is where, so then this is why, so then, yeah, so then you can kind of, yeah, draw out the steps from there.
Yeah. So, what I'm confused on is, these like little uh candles
Hmm.
that have like, you know, wicks up and down. I mean, can I consider that as a solidified point?
Yeah, I mean, basically the last point that didn't get touched is a solidified point. That's why it changed directions.
Sometimes it does that, but it's actually like a continuation break where it'll look like it's breaking a solidified point, but it's not really.
Yeah, bro, that's why I kind of stopped trading the third step to the second step. Because like you'll burn yourself out.
trying to catch every single one, you know?
Yeah.
That's why like I'd much rather prefer to be in a solidified range, like inside a solidified range, knowing I'm either targeting this high or this low.
Yeah. There's this one too. Like by the time it came up here and broke, like you would enter this, but you know, it would blow straight through your stop loss.
Yeah, that shit failed.
Yeah.
Yeah, so then now let's see everything from like the bigger picture, how we can
It failed and then it didn't take out this low, so it's like what the fuck? We're going up
yeah.
or down?
Yeah, exactly. Exactly. Yeah, it tried to go back up. And then where did it ultimately break?
Then yeah, it broke below this. Yeah, it didn't break above that one, so broke below
Boom.
that.
Exactly, broke below that. And then this is where it became a very interesting week. So you see how before you see everything I had you do before going over that 15-minute range.
Yeah.
This is my process every time before even going to a 15-minute. Because if you go from a 15-minute time frame straight to a 15-minute chart, it can get confusing. But then
Yeah.
this is literally what I do every single time before even going into like a 5-minute range, even a 30-minute. I always see what range is inside what range. So now that we identified this low, this high, and this was pretty much like the third solidified point within this range to continue higher, to continue higher here, look what happened. It failed. So then this
Yeah.
is where this became interesting because I've been discovering like you know how I've refined the strategy with the candlestick closures now. And then look how on the 1 hour, this candlestick, look how the 1 hour closed. And then you can see how important the candlestick closures are.
Big
It
boy.
didn't wick, like it didn't form a liquidity grab. Like look at the difference in between, like look, it's a perfect example here. Look at the difference in between, like this was a third solidified point that failed, but then look what happened when it touched it. The body didn't close below, it just wicked and then shot up. So that's why we didn't immediately like go down. Like even though we still ended up touching this low, but like look at the difference between this break versus this break.
Yeah.
That one was a secure 1 hour close. So then that's why this became interesting to me. So now make it smaller, like vertically, I mean, horizontally, so I can see like everything. No, 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 the other way. Yeah. So then that's why it became very interesting to me because I was just like, okay, we're in. Yeah, keep it still. I was like, we're in between. Yeah, keep it. Don't move it. I was like, we're in between this low, this high, and then this third solidified point failed here. And then the 1 hour closed like strong bearish. So I was like, okay, technically we're in this bearish range, but then look how Nas just after every low has been shooting back up. You see, like after every low, it just likes to shoot back up. So I was like, is this 1 hour candlestick closure to the downside that strong to where we're gonna fail to continue higher? And then this is why I was so confident on catching the sells on Friday here.
Yeah.
And pretty much that's why the sales just came here the whole week. So you can see how you wanted to go over this range first, but I made you go over all this first. So you can know why this small 15-minute range failed. This 15-minute bullish range, because you were asking here, you were like, it made the steps, but then why did it fail here? The reason why it failed was because we were inside this range. The third solidified point, we already made it to continue higher. This failed. The 1 hour candlestick closure were from this high to this low. And then also we formed, so yeah, after this break, we literally formed the steps again here. So like, I'm pretty sure you'll be able to see it. Like first step, new range. Second step, last push. Third step, your solidified low. So look, boom, broke a solidified low. And then we formed the bullish steps from here. But then this third solidified point happened during Asia. So then look, we formed a new range here, this low to this high. So you can see 1, 2, 3. And then we formed the third solidified point here on a smaller time frame. And then we took this out. We touched it. We simply touched it. So then this is why the break out of a new range and candlestick closures matter like extremely. This is why like it perfects the strategy even more. So then now that we know that all of this has failed to continue higher, now we're pretty much between this high and then this low. And then now you can zoom in into like the 30-minute, 15-minute here. Yeah, boom. So now show me. Okay, boom, yeah. So now show me how you would draw this out. So before you erase this line, and then show me how you would draw it out from like left to right from this bearish range.
You want me to? Okay, gotcha.
Yeah.
So starting from here, right? Because this was our last line. Okay. That's 1. That's 2.
Or if you want, it's okay. I'll draw it out.
Yeah.
Yeah, so zoom back, minimize it. Yeah, so I can see more. Yeah, I want to see more of the chart. Yeah. And put it like nice in the middle. Put it in the middle. Yeah.
Right.
Okay, boom. Yeah. So, but let me see the high and the low. To like the max of the screen. Like yeah. Let me see the high and the low of the bigger range overall. Yeah. Yeah, there you go.
Is that good?
Yeah, pretty much. So but make like I want this high to be up there and then this low to be down here.
Okay.
Okay, yeah, that's good enough. All right. So then now you can see how look we have this high to this low. And then I'm always viewing the chart in a bullish aspect. This is just me. Like I never like looking at it from a bearish aspect. So even if I sell, I like selling from failed bullish ranges. So this is just me personally. So the way that I looked at everything, I was just like, okay, we still broke below this low. And then at the time, I was like, okay, is this candlestick closure strong enough to where all this is going to fail? So with this in mind, I was like, okay, that candlestick closed bearish. We failed multiple times to continue higher. Let's see how all this plays out. So before that range played out where you have the drawings, the steps again, I was like, okay, I was looking at it like this. So you can see we had a solidified point here. Boom, new range, first step, second step, and then right here on the bigger time frame, third step. And then you can see how we retrace back down to the last push. And then during Asia session, we made the perfect break of structure, our fourth step, but we had no retracement. We just shot straight up. And then we simply touched the high. So you can see out here, like if you put the magnet from this high to this high, you can see how we literally just touched it. And always put the start from left to right. Always start from left to right. Yeah. Boom. Okay. Yeah. So I saw how, what day was that? This session, what day was this? Was that on a Tuesday? Wednesday. Okay, yeah. So I saw, so yeah, this week was good. And so then I saw, yeah, draw out the line again from here to there. Yeah, boom. So you can see how pretty much, yeah, draw out just the lines from here, like how we had this range. Boom, boom, boom. So they can stay on there from your side.
So then these aren't 1, 2, right?
Mm, that's not how I was
Just one
looking
of
at it.
oh
Like I was explaining it to you the way that I was looking at it this week or
yeah.
that week.
Yeah, because if that was 1, 2, then this would be 3, 4, and 4 was supposed to come here, but no. Yeah.
No, remember, always start from left to right. You're in the habit of going from right to left.
Don't skip it.
Yeah. Always go from yeah, like I mean you don't have to draw out the last push line, but I'm saying draw out the lines that I had drawn out
Okay.
like
So
this.
then
No, you don't have to draw. I was just saying draw out these.
I'll just draw out those.
Yeah. Boom. No, no, no. Where did it break?
Huh. Oh, this broke right here.
Right there. Boom. Okay, so now so you can see how we completed this bullish range. You can see how it formed these steps perfect. One, two, three, three. And then right here, draw this out. Boom, boom, boom. We completed the four. Boom. Okay, yeah. So you can see how we completed this range from this low to this high, and we completed it right there. But then look how we barely touched it. So then now go into like the 10-minute, 5-minute. So then now to answer how it failed. So then now, realistically, if we're going to continue bullish, we should continue bullish from these ranges. From yeah, make it taller, like make it longer vertically. Now we're zooming into this range. Yeah, yeah. From this low to this high. So then if we're bullish, if we're truly going to continue to be bullish, we should continue higher from this range. So then Wednesday session, we were from this low, this high. So you can see how the boom. I mean, technically, yeah, you could say we were within, yeah, the intraday range from broke below this, broke above this. We were this low, this high. And then look how right before New York session, we formed a solidified point there. And then we broke it. But to me, it just wasn't convincing because it wasn't convincing how before market open, we made the third solidified point to continue higher. You can see one, two, three, four, and then look how we failed here. So then that's why I was able to catch sells here. And then that's why they were so clean. And then you can see how once all this, it just kept melting because not only did this not fully break above it, but then we had already fully analyzed how we were pretty much already more lenient to the bearish side from the bigger time frame ranges. So then this failed right here because we were in this range, and then this third solidified point failed. But you can see how before I simply just went over this, like I could have just kept this call short and just explained this on the small time frame. But then look how where my confidence came from all this because I had you break down everything from the bigger time frame ranges first. And then that's why you can see how once all this, that's why this week, bro, it just kept falling, bro. So then now go back to like the 1 hour. Like that's why that whole week sales are just picture perfect because of that 1 hour candlestick closure and and all the failed ranges continuing to the upside.
do have less than a minute.
No, go minimize it so you can see more of the charts. Yeah. So you can see how after that, price just fell. Like we showed really no more, attempts to the upside from that because of all this from everything that we just went over. That's why from that failed third point from that range that you explained, like why did it fail? Look how like we simply just had a retracement here, and then you can see the rest of the days we just fell like perfectly. This fell so perfect because of all these failed ranges that we went over and this big bearish range and this. And boom, that wraps up the final call. There's still one last part after this. You can see how every call is tailored specifically to the student. Once the student starts to get more experience, I have them go through the motion and I want to see how they would mark out everything, and I correct them what's right, what's wrong, what I would do, etc. It's specifically tailored to them one-on-one. Imagine if you had me alongside your journey to teach you exactly like this through one-on-one Zoom calls just for you. If you like what you see, make sure you check out the links down below in the description. All right, boom. So to go off of everything that I just said, I explained how this third solidified point to continue higher here failed, but then I realized how he initially asked about this one. So I don't have to repeat everything. You guys saw how I was literally just explaining how everything took in a factor based off of this big ass bearish range. Oh, fuck. These ranges right here failing to continue higher. So you guys see this call was a very good call to show how I put the student around of how I would do it. So you guys see with other students, if they don't have enough experience, I pretty much just take over and show them everything. But then once they start getting enough experience, I'm like, okay, you need to start going through the motion and you need to start practicing it, because if you don't practice it yourself, you're not going to get it down. You can only learn so much just watching it. You actually have to practice it yourself. So I don't have to repeat everything. Pretty much what I was saying, how all this was failing because of all the ranges previously. Like I mentioned before, I could have kept the call very short and just be like, oh yeah, this failed simply because of this, but I need him to understand the bigger time frames. And then right here, so you guys saw the first call right there in the beginning of the course with Jurgen. That was the end of May, beginning of June, when markets were just pumping. It just kept making all-time new highs, and it was just following the checklist, picture perfect, almost every single day to a T from a bullish aspect. So when it's like that, the solidified points, like the fourth and fifth step, it gets respected a lot because it's just continuously going up. It's in a clear uptrend. But when you're dealing with scenarios like this, to where, it's failed to go high multiple times, it's ranging in between ranges right here. Like you could see we were clearly slowing down to go bullish, and we were in this clear bearish solidified range, and this 1 hour candlestick closure was very important. So right here, this is why I repeat the steps all the way down to the 1 minute. And I have some students like Antoine and Luis, they go down to the 15 second and the 5 second. I don't teach that from the get-go, because if you don't understand all your ranges at first, you're gonna just lose because you're gonna be so caught up in the small time frames that you're just gonna get clapped. You have to understand everything from the 4 hour, 1 hour, 30 minute, everything you have to understand. And then once you understand everything perfectly down to the 1 minute, then you can start to go into the seconds. But that's for later on. So that's why the fifth step and breaking down the solidified points all the way down to the 1 minute is so important, because let's say, you weren't looking at the bigger time frames here. You were only looking at, like, the 15 minute, 5 minute. Because if you go on the 15 minute, 5 minute right here, it looks like a perfect bullish range, right? That's why you have to understand the bigger time frames. But right here, even right here, like let's say I'm breaking down the steps all over again. You see right here, first step, your new range. Second step, the last push. Third step, your solidified high, the retracement, right? And then also the movements in the sessions matter. This is just going to come from experience. Like I've mentioned in the calls, you start to get an intuition. It's like a language. You learn the language and you know what it's going to do. That's why I recommend stick 1 to 2 pairs max. I've only been trading NAS since like last year, November, consistently New York market open. So you just get an intuition. You know what it's going to do. So you can see right here at market open what I was describing previously. Like it wasn't convincing to me that we had already made the third step. I mean, the third solidified point to continue higher before the session. So I was already kind of lenient more towards the sales, because this wasn't a convincing new range, and I was already realizing how we were kind of more bearish. But then right here, you can see at market open, it had already dumped 575 points in 3 hours, right? So you guys can see sometimes you guys can see it'll be sporadic and then have a move to the upside, downside, and then back up. But you can see the market really only does like one or two big moves in the session. I'm talking about like big points. I'm not talking about like small, like 40-point moves that you can see. It pushed down 590 points, almost 600 points, and then we retraced back up another 344 points. So you could see it already had two good volatile moves. So then right here, what I was explaining, how you repeat the steps. The fourth step was your third solidified point to continue higher. And then you can see here during London, like is London session, is London session really going to be the session that's going to make this go back up another 500 points back up to the sixth step, your high? So then right here, even if you're looking like you're trading London session and you're looking at everything, I repeat the steps all over again here. First step, new range out of your break of structure. Out of a solidified point, you can see continuation break, target, solidified point, BOS. First step, new range. Second step, last push. Third step is your solidified high, the retracement. But then even look at this right here, like you could just see it wasn't clean. It's not a clean range. If you go look at all the other clean bullish ranges, it shouldn't be kind of like bullshitting like this. You can see like when NAS is going to move clean, there should be clean ranges. There should be a clear trend, a clear direction. Anytime it's choppy, be aware and wait for your solidified points. So right here, let's say, boom, right here, I'm coming back and look at this. You can see we broke out of this solidified point, so we met a bearish range. And this is why ranges are very important. You need to distinguish your continuation breaks versus your actual breaks of structure. Right here, continuation break. We didn't do this. We didn't form continuation break, target, solidified point, break of structure of a solidified point. We simply only did the first continuation break. This is why you have to be patient, because maybe sometimes like let's say it's 4 a.m. You're like, oh, you see this nice little move. You're like, oh, that's the break of structure that is going to continue higher. But you have to wait for your solidified points, wait for your steps, wait for that continuation break to get taken out. Right here, now this becomes solidified. Now I formed that pattern. And then look, you can place an alert here, be like, okay, I'm not going to touch it until it breaks that solidified point. And then this is still a good size little range. So then this is where that's still 160 points. So then even after this break, I would repeat the steps all over again and wait for another break of structure. But you could see how it never came. And instead, it just completely failed and then just melted. And what I explained early in the call, how everything was so aligned already for the bearish aspect that once this quote unquote bullish range failed, it was just simply straight to the downside. Like you could see we showed no more signs trying to go back up because everything was already in place in favor to go bearish based off of all these failed bullish ranges. This failed, solidified point to continue higher here. You see, boom, continuation break target, boom, solidified point, BOS. We tried to go higher here, then failed. So then everything was in favor to just continue lower here. Boom. And then what I mentioned previously before, now we're getting into more recent stuff. Like what I explained, anytime there's a deep retracement, it's just going to go right back up. So you can see how, yes, we did take this point out here. And then from here, we just shot right back up. And then now we're in between this bullish range. And then we're still just going right back up to all-time highs. So you could see how anytime there's a deep retracement, bro, it's just going to go right back up. So yeah, this was a very good course. And this is just, guys, a glimpse of the calls, bro. I have so many one-on-one calls with students, hours and hours and hours of all these types of calls, going more in depth, answering their questions, going over their charts, reviewing everything. And just how you saw with Jurgen, he was like, do you think he already passed his account and he's on track to get a payout? Because that was that call was like, beginning of May or beginning of June. But you can see he's like, hey, do you think I'm ready? And then I was just like, bro, you're not ready yet. So that's what I always mention, to where that's the point of having a one-on-one mentor. Because if you're trying to do this shit on your own, you're going to go loss after loss. You're not going to know who to ask. You're not going to have any help. You're just going to do this shit on your own. And then you're not going to realize your mistakes. But when you have someone that's there teaching you one-on-one, side by side, I'm like, hey, bro, there's no point of putting in money. There's no point of buying a funded account, even if it's only like $60, $80, if you don't know what you're doing yet. So I make sure all my students are confident and can read the charts the way that I read it. And then obviously, you're not going to get it right away. You have to go through the motion, but I make sure that the students can read the charts, are confident, because bad psychology in trading comes from not being confident, not having a good strategy. So, like, of course, you're gonna have bad psychology if you don't know what you're doing. Like, you should be confident entering a trade. Every time I enter a trade, I'm pretty much almost damn guaranteed knowing where it's going, where I have to exit everything. Everything is picture perfect. Like, I like being in a clear direction, a clear trend, a clean, solidified range. I like waiting for my fourth and fifth step. And even if I'm selling, like what I explained, I like looking at it from a bullish aspect. Even if it's bearish, I like waiting, like in my eyes, waiting for the bullish range to fail. And then everything based off of solidified points. I've refined the strategy now with candlestick closures on the solidified points. You have to be confident. And then another thing is risk management, bro. When I first started learning this strategy, I swear on everything, I was risking 0.1%, like borderline not making any money. I didn't care about the money. Like, you have to put the money at last. It's not the amount of funded accounts you have. It's not the amount of money you fund your live account with. It's the skill set of being able to catch trades and win trades consistently. So when you're first starting out the strategy, start with the practice account. And then once you can see that you're consistently winning with the practice account, journal all your trades, your wins, your losses. If you won is going to be for a reason. If you lost is going to be for a reason. Go over your losses. And then until it hurts bad enough is when you're going to stop. Until you touch that stove that's hot enough and you burn your hand, you're going to stop touching that dang hot stove. So just like with me, at the beginning, I was too focused on the small time frames, uh, not distinguishing my continuation breaks versus breaker structure because I was too zoomed in, and I just kept losing, losing, losing. And then it wasn't until, I was hopping on the calls with my mentor, and then I was like, okay, he was just like, bro, you need to zoom out. Like, you're getting clapped on all these continuation breaks. So at the beginning, risk 0.1% until you see that you can consistently win. Why are you going to go for a home run? Why are you going to try and pass your account? Why are you going to try and flip your account if you don't know what you're doing yet? You're going to burn yourself. You're going to burn your psychology. You're going to be scared to place a trade because it's going to be difficult to try and keep trading if you just blew 10 accounts, if you just blew $1,000 on your live account. So at the beginning, please use risk management. Only risk 0.1%. And it's going to sound gay, but only risk 0.1% until you see that you can consistently win and you start gradually going. And everybody has a different risk appetite, everybody has a different patience drive, but I promise you that is going to save you from burning yourself and burning your psychology and your confidence, because trading is going to be confident. Like, if you're training MMA and boxing, your first sparring match, your first boxing match, you're not going to go in and freaking box Mike Tyson, So you have to gradually go step by step. Like, you're not gonna go in the gym as a beginner and just bench 315 pounds, like you have to start and gradually progress. So a lot of people think like they can just skip the process of having good risk management and trading. They're like, oh, fuck it, I'm gonna take my chances and go all in, and then you blow your account, and then now you're scared to place a trade. So yeah, just have good risk management. And then also, guys, just bro, like, it sounds simple, but always use a stop loss, bro. Always use a stop loss. Like, you'd be surprised some people not using stop losses, but use a stop loss, bro. Yeah, this was a lot of good knowledge compared to the first one. So just keep studying, guys. Keep studying. Just focus, break it down from the 4 hour. Start from the 4 hour. Don't ever start from the 15-minute, the 30-minute, the 5-minute. Start from the bigger time frames and then chop it down. Just like what I was explaining to Aram. Don't skip a range. Don't skip any steps. Always start from left to right. It's like a book. You have to start from left to right. When you're reading a book, you're not going to start from the middle of the page on the all far right sentence, because then you're going to be like, well, what happened over here? So same thing goes for trading. You have to start from the top of the left of the book and then follow everything perfectly. All these markets, all these moves have a reason. Every move in this market has a reason. This is literally an algorithm. Like, I have students that has done this. They trade this on stocks. They trade this on crypto. It works on everything, bro. This is literally, I could say, an algorithm to the market. The market moves in these ranges, in these solidified points, in these steps. So just study this over and over and over again, and then just lock in. And this is just a glimpse, guys. Like, imagine if you had access to this and to me 24/7, to where we could always do a call go over your mistakes, go over your trades, trade live with me, etc. So, and boom, that wraps up the Final Boss course part 2. Like I just said, this was just a glimpse of everything. I have hours and hours and hours of one-on-one calls tailored specifically to each student, teaching them personally one-on-one. Imagine if you had me alongside your journey to teach you just like this, your own personal one-on-one Zoom calls tailored specifically for you. It doesn't matter your experience level, I'll teach you everything you need to know A to Z through private one-on-one Zoom calls that I record and send it to you. I'll add you to the private exclusive Discord where I trade live with my students Monday through Friday. And you'll be in a private community with me personally every single day and all my profitable students where we keep each other accountable and help each other genuinely every single day. And just remember, no one learns a skill set on their own. Every professional athlete has a coach. Every pro MMA fighter, boxer has a coach. They train with the coach every single day one-on-one outside of their fights, and they have their coaches inside the fights coaching them throughout the fight, telling them what's wrong, what's right, what they don't see, what they need to do, etc. Same goes for all sports. Every pro soccer player, football player has a coach outside of the games, trains with them every single day. They have multiple coaches, even have freaking diet coaches that tell them what to eat specifically every day. They get coached on the field, off the field, during the games, everything. So if every pro athlete has a coach, what makes you think you could learn the skill set on your own? So if you're ready to pull the trigger and want me to mentor you personally one-on-one, fill out the application down below, and if you're qualified, we'll talk soon, bro. Much love, peace.